Assalamualaikum and hi everyone. Welcome to another presentation on MFRS, and today's presentation is on MFRS 140 investment property, and this is equivalent to IAS 40 investment property. I am Madam Yusnaliza Hamid. So let's start. So this is the learning outcome of this particular MFRS. So you are going to learn and what is the definition of investment property. To start, investment property will refer typically to land and building, or maybe just a land or a building, or both, or part of a building that is held for rental or for capital appreciation or for both. So we're going to explain examples of investment property. You should be able to explain recognition criteria of investment property, compute the initial cost, discuss the initial measurement of it, discuss the subsequent measurement under the investment property, and discuss the measurement upon the transfer from investment property to another asset, for let's say for the case of to a PPE and vice versa, and also to prepare relevant accounting entries and disclosure in the statement of profit or loss and other comprehensive income, and also the impact in the statement of financial position, presentation, and also the disclosure requirement. So let's look at the introduction. To start, the objective of this standard is to prescribe the accounting treatment for investment property that is its related disclosure requirements. So we're going to look at part. And for your information, reporting entities may invest in properties for the purpose of earning rental income, which is the income of the company, earning rental income, or for capital appreciation. And these items, which are land and buildings, are not primarily used in the main business operation. And if you have this investment, these are known as investment property under MFRS 140, where the investment property will be able to generate cash flow largely independently of the other asset held by the entity, the reporting entity. So shall we look at the definition? The investment property is a property which can be land or a building or part of a building or both. Both here refers to both land and building that are held by the owner or by the lessee, are either held by the owner or by the lessee, which is through finance lease. If let's say the owner lease the asset to the lessee under a finance lease to the lessee, that is an investment property. But if an owner lease to the asset under operating lease, that is actually an investment property to the owner, and that is held to earn rentals. For example, this house is built and then completed and later being advertised to get people to have it being rented. And then the second one is for capital appreciation. So you may have invested in this apartment, and this apartment, you do not go and stay in there, but you are waiting for the price to rise, and you have that speculative motive where you are expecting that there will be an increase in the value from time to time. Or for both mean you acquire a property or maybe a building, and that was acquired for both intention or the purpose of earning the rentals. So the issue is about the purpose of that building or the land for rental as well as for capital appreciation. That was the meaning of the term both here. Next, rather than for, so this is not an investment property because the definition clarify that, rather than for use in the production or supply of goods or services or for admin purpose. Note that this is under MFRS 116. So if you have this building held for rental, held for capital appreciation, it is an IP. But if it's under A here, which refers to production, supply of goods or services, or for admin purpose, This is not an IP, so this is under MFRS 116 PPE. And then you have also, if you have, let's say it's a construction company, and the construction company constructed houses or constructed some apartments here, and this apartment was actually held for sale in the ordinary course of business. They completed and they are getting the buyer of the apartment, so that was a held for sale in the ordinary course of business, so those will be accounted by that particular company under MFRS 102. So you can also have a go of what I put here regarding finance lease and operating lease. So let us look at the examples of investment property that was laid down by Mfrs 140 paragraph 8. Some of the items are classified investment property. Land that was held for long-term capital appreciation, not for short-term sale in the ordinary course of business. Land, if you purchase them and you have not decided on what is the purpose of purchasing the land, you have not determined what will be the future use of it, so that will be also an investment property. Building that was leased out under one or more operating lease. So if you are the lessor, you are the owner, and you lease out to lessee under one or more operating lease, that is still a building to the owner, because the risks and rewards are not transferred to the another entity. Next one is when you have your building and your building is left vacant. So when you left the building vacant, therefore that is also an investment property and is held to be leased out again under one or more operating lease. It is left vacant. Or maybe a property that is being constructed or developed for future use as investment property. The MFRS 140 paragraph 9 under the MFRS itself talks about owner-occupied property, and these are the following items that are outside the scope of the standards, which is MFRS 140, and therefore these are the examples of items which are not classified as investment property. The first one, if you have a property held for sale in ordinary course of business, that was just an emphasis of the definition or an example. Property under construction or development on behalf of third parties. You are constructing on behalf of a third party, and therefore there is not an IP of your company. Owner-occupied property. So owner-occupied property is actually a PPE. Owner-occupied property, according to the MFRS 140 paragraph 9, is property held by the owner or by the lessee under a finance lease. If it's by the lessee, it should be under the finance lease. If it's by the owner, it should be under operating lease. For use in the production, for supply of goods or services, or for admin purpose. So if you have this property, land or a building or part of a building, or both land and building that were used for this purpose here, which are similar to those under MFRS 116. Therefore, that is under paragraph 7. Sorry, that was not paragraph 8, the paragraph 9, paragraph 7, because paragraph 9 refers to the examples of non-investment property. It is paragraph 7 that refers to the owner-occupied property. So if it's an owner-occupied property, it is not the investment property, and owner-occupied property is actually under MFRS 116. So this is also not IP, but this is under MFRS 102. Property occupied by employee of the owner, employee of the reporting entity. This is under MFRS 116. It is not an IP. Property that you are awaiting for disposal. So you are waiting for the to sell the property, so this is not an IP. MFRS 116. Let's say first it was being occupied, but later you decided to sell, and in that period that is under MFRS 116. property that are leased to another entity under a finance lease arrangement. So to the owner, that is not an IP, but to the lessee under this finance lease arrangement, that is actually an IP to the lessee. So let's look at some example, but before that we have some classification that I would like to also discuss here, which is the classification issues under MFRS 140. You may have properties with dual use or multiple usage or mixed use. So according to the standards, paragraph 10, entity might use parts of a property, land or a building, or just part of a building as OOP. Remember, OOP is owner-occupied property, such as in the production or supply of goods or services. So if you held it again for supply of goods in the production, which is the criteria for owner-occupied property, or for admin purpose, therefore that is going to be the case that you need to also notice if other parts of it or the portion of the same property are held for earning rentals or for capital appreciation. So if let's say part of a property are held for owner-occupied function, and the remaining are held for rental or for capital appreciation, this is considered as properties with dual use. So therefore, this means that part of a property might be owner occupied and part might be held as an investment under MFRS 140, which is investment property. So let us look at the guideline given by, or the rules given by MFRS 140 on this. So according to MFRS 140, if the portion can be sold or leased out separately, the portion shall be accounted for separately in accordance with the relevant MFRS. So the portions that are being rented out, if that can be sold out separately or being that should be accounted for under MFRS 140 as an investment property. If the portions for capital appreciation should also be accounted for under MFRS 140 investment property, provided that it can be sold or leased out separately. For the portion that are owner occupied, it is classified as PPE, which is going to be an item of PPE building that are categorized under MFRS 116, which is a PPE. However, the standards proceed and highlighted that if the portion cannot be sold or leased out separately, therefore the whole property will be classified as investment property if the portions that are held to be used as an owner-occupied function is insignificant. So if the portion held as owner-occupied is insignificant, the whole property will be accounted for as investment property. Investment property means this is going to be under MFRS 140. You have other examples that you can refer to by referring to your textbook. Next, we have one problem here. Problem 1 about a company. This is regarding the issue of whether the property can be sold or leased out separately. Also, that is relating to property with mixed use or with dual use. A company, MCRU, acquires a 10-story building in Toronto, Perak, and 6 stories of the building are held for supply of goods and services to its customers. So this one is actually shows the characteristic of what you call owner occupied function, OOP. The remaining 4 stories are leased out to tenant under operating lease. So under operating lease, you should note that under operating lease to the owner, MCRU Berhad, this is going to be an IP. So you need to read further. The cost of the whole building, the 10-story building, was 500 million. right? And according to the sale and purchase agreement of this building, each story can be sold or leased out separately. So that is an important point there. It can be sold or leased out separately. So you're required to determine whether the 10-story building, the whole building, can be recognized as an item of investment property. You're asked to give reasons for your answer with reference to MFRS 140, investment property. Take note that the standards mention that if you can sell or lease out separately, that should have been accounted separately. So let's look at the answer here. If you can recall the definition, these are the definition of the investment property. We want to determine whether it is an IP, so we need to start off by giving the full definition. Then you would notice that as each story of the building can be sold out separately based on the information here, the owner shall account for 6 and 4 story separately. So the 6-story and the 4-story should be accounted for separately, right? So let's look to the rules that are prescribed by the standard. According to MFRS 140, the company shall classify the 6-story building as owner-occupied property, and this is under MFRS 116. Why? Because it is held for supply of goods and services to its customer, because it can be sold or leased out separately. The next one is the remaining 4-story. The remaining 4-story that was leased out under operating lease to the tenant shall be classified as IP, investment property, under MFRS 140. And the company shall allocate 60% from 500,000, which is 300 million, from the total cost as PPE, that will be disclosed as non-current asset in the statement of financial position, and 40% that refers to the investment property. Why 60-40? Because there was 6 and 4 stories. So 40%, which is 200 million, will be an IP, and 60% will be a PPE. So that's how things work for property with dual use. So let's look at property within the group. This is another classification issue, that you may have property owned by a group. Group here refers to a parent with subsidiaries when you account them in the consolidated financial statement, and that was occupied by the parent or subsidiary. Let's say you have a building that are being rented out to the subsidiary and you are the parent. So this will give rise to intra-company rental income and expenses. So according to the standard, it shall be classified as property, plant, and equipment under MFRS 140 in the consolidated financial statement. The financial statement that combine the result or the financial result of the parent and the subsidiary. So in the consolidated financial statement that are prepared by the parent, that is going to be a PPE. This is not an IP. However, to the point of view of the parent, for example, in its separate financial statement, before it is being combined with the subsidiary, its individual or separate financial statement, that can be classified as investment property, as the company, which is the parent company, let's say, owns the property. If the property is owned by the subsidiary, it will be classified by the subsidiary as investment property. So it depends on who owns the property, and that will be the investment property for the case of properties within a group. Next, you have another classification issue here on properties with ancillary services. So property with ancillary services are this situation where the reporting owner or the entity which are the owner of the property, the building, for example, provides ancillary services such as security and maintenance to the occupants or tenants of its property, either land or a building. And the following rules, of some of which may really require your careful judgment, professional judgment, and you need to apply that. These are the case where ancillary services, how do you decide how to classify this property that have been provided with ancillary services. You need to look at whether ancillary services such as the security and maintenance services that are being provided by the owner, is it significant or not. So the standard says that if the ancillary services provided are not significant, where the services are relatively insignificant component of the arrangement as a whole, so therefore the property is accounted for as investment property. So if the services provided are not significant, so it will be accounted for as IP if it is not significant to the whole arrangement of the business, right? Next one is if you have ancillary services provided which are significant, where the services which may refer to not just security and maintenance, we'll look at the example later, are more significant components. So if it's more significant component, relatively more significant to the arrangement as a whole, so the property will be accounted for as a PPE in accordance with Mfrs 116. So this is normally a typical example about a managed hotel. So normally hotel which are managed by the owner will be classified as a PPE. So these are some examples to illustrate ancillary services are insignificant to the component as a whole. So we have this example here. MRM owns a property that comprises 100 independent living units, and it rents out to residents, and all units have fully equipped kitchen. And as part of the rental agreement, MRM, which is the owner itself, provide cleaning services, landscaping of common areas, and 24-hour security staff. So this is about a property that have 100 independent living units, a condominium, probably a condominium. MRM classify the independent living units, the apartment units here as investment property. The reason is because the services provided, which are cleaning services, the common areas, perhaps just the playground or maybe those landscape, were just very insignificant to the resident. And cleaning, maintenance, landscaping, securities are just ancillary services that appear to be relatively insignificant to the arrangement as a whole. And owner is regarded as a passive investor, and therefore it will be classified under Mfrs 140. Next, this is the second example that shows the ancillary services are significant. Here you have 100 apartments that are being rented out to residents. It is an aged care facility, and as part of the rental agreement with the resident, aged care company, CO, provides daily cleaning services. It employs nurses to take care of the residents. Remember, they are aged care resident, and provides security staff, provide on-site maintenance services, and staff provide meals for the resident, and also organize and provides entertainment to other activities. So it looks so significant because the situation here is that it is being rented out to residents, and these are aged care facility. So the company is effectively using the property in the supply of nursing home services. It appears that to the resident, and as such, it could classify the apartment as a PPE under Mfrs 116. So this would be a PPE because it was held for supply of services. And the services provided, which are, as what you can see here, cleaning, permanent carers and security, meals and maintenance appear to be relatively significant to the arrangement as a whole. So therefore, these apartments, right, that are being rented out to the resident will be treated as investment property. It will be treated as property, plant and equipment, not an IP but a PPE, since it was held mainly for supply of service, although it is being rented out.